How to perform company analysis. Performing a thorough company analysis involves a combination of quantitative and qualitative assessments. Here's a comprehensive guide that outlines the steps you can take. 1. Understand the business model. Define the industry and understand the company's position within it. Identify key revenue streams and business segments. Consider the company's competitive advantage and market positioning. 2. Collect financial statements. Obtain the company's financial statements, balance sheet, profit or loss statement, and cash flow statement. Look for the latest annual and quarterly reports. 3. Review the annual report. Analyze the management discussion and analysis, MD&A section for insights into the company's performance, strategy, and risks. Check for any significant events or developments. 4. Quantitative analysis. A. Balance sheet. Assess the company's assets, liabilities, and equity. Analyze the composition of current and non-current assets and liabilities. B. Profit or loss statement. Evaluate revenue growth, gross margin, operating expenses, and net income. Look for trends and consistency in performance. C. Cash flow statement. Analyze operating, investing, and financing cash flows. Assess the company's ability to generate and manage cash. D. Notes to accounts. Pay attention to accounting policies, contingent liabilities, and any exceptional items. A. Ratio analysis. Utilize activity, liquidity, solvency, profitability, and valuation ratios. Compare ratios to industry benchmarks and historical data. 5. Qualitative analysis. A. Management and governance. Assess the competence and track record of the management team. Evaluate corporate governance practices. B. Industry and market analysis. Understand industry dynamics, trends, and competitive landscape. Consider market conditions and potential disruptors. C. SWOT analysis. Identify the company's strengths, weaknesses, opportunities, and threats. D. Risks. Identify and assess both internal and external risks. Consider regulatory, market, operational, and financial risks. A. Future prospects. Evaluate the company's growth prospects and potential challenges. Consider any upcoming product launches or expansions. C. Valuation. Use various valuation methods such as discounted cash flow, DCF, price to earnings, PE, and comparable company analysis, CCA. Stay tuned for more updates.